5% down jumbo loan, like what? And actually, technically, today's video is about 5% jumbo, but there are some instances where I can actually do a 3% down jumbo. I'm Stephanie Weeks, and I've been helping thousands and thousands of people with their mortgage financing for over 18 years. So this is why you should listen to me. This is why you should stay tuned to the end of the video. And I want to say thank you so much for tuning in. So what is a jumbo loan? All right, so when we're talking about, which today we're talking about conventional, we're not talking about VA or RD, we're not talking about FHA today, we're talking about conventional. And conventional usually falls under Fannie or Freddie. And every so often, they will update, and sometimes, like it's every year, but sometimes they'll keep the limits the same. And they'll update the conforming loan limit. And what does that mean? Well, generally it means that it's going to become jumbo if it's over this specific loan amount. And jumbo actually has more restrictions than a conforming loan. But some of these restrictions are actually lightening up, which is what we're going to talk about today. So as an example, and before I jump into that, so my name is Stephanie. I've been helping with mortgage financing for over 18 years, and my mission is to spread mortgage peace and help with educating you with anything and everything having to do with mortgage loans. So thank you so much for tuning in. Be sure to like and subscribe and hit the share button if you think this might help anyone that's looking. So when it comes to the conforming loan limit, I'm shooting this video in 2022, and so the current loan limit, and what some people don't realize is it's actually different for 1 unit versus 2 unit versus 3 unit versus 4. So right now, the loan limit for jumbo 1 unit is $647,200. For 2 unit, that's $828,700. For 3 unit, it's $1,106,000. Oh my gosh, I can't even say it. 1001,650. I can't get the words out. And then the 4 unit is actually over 1.2 million. So $1,244,850. All right. So we're talking about today, it's going to be specifically just 1 unit because it is very different when you get into multi-unit, such as 2, 3, or 4 unit. And when you go above 4 unit, it's more of a commercial lending versus a residential type of lending, which falls under like a Fannie and Freddie as an example, although they do have some commercial stuff, but it's another topic for another day. All right, so jumbo loans. In the not so near past, or in the near past, it was like, look, if you weren't putting down 20% and you didn't have a 720 credit score and you didn't have a debt to income below sometimes 35% if you were self-employed or 41% otherwise in general, and if you didn't have 6 months savings in the bank and just blah, 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 it was going to be so difficult to get a jumbo loan. So what some people did is they actually would break it into 2 loans if they could do so, and it made sense to keep their first loan under the jumbo limits because it was so much easier to qualify. Well, now some of those things have become a lot easier. Like when it first went from, all right, you need all that stuff and the 20% and everything, and then it went to like, okay, well, some investors will do 10% down, but the rate's gonna be out the box, and you still have to meet all these completely ridiculous criteria, including higher credit scores and things like that. Now, don't get me wrong, higher credit scores are really, really helpful and important when you're looking at jumbo lending, but you're not necessarily stuck with that 20% down anymore. Like I said, sometimes we can even do as little as 3% down for qualified buyers. So what does that kind of look like? And how might things go with a jumbo type of financing? Now, keep in mind, jumbo is the loan limit. It's not the sales price. So if you buy a $10 million single family 1 unit home and you borrow $647,200, you are still not hitting a jumbo loan. So it's the loan amount, it's not the sales price. So let me just give you some examples, and I'm just going to kind of pull some numbers out and calculate. These are not pre-made, so it's kind of shooting in the dark, so bear with me, but I can usually get pretty close. All right, so let's say that you want to buy a house and it's $700,000, okay? 647, 200, and you want to max out jumbo lending if possible. with as little money down as possible. So if you want to stay conforming and borrow $647,200, then you'd be at a 92% loan to value. But we're talking jumbo today. So if I take $700,000, and let's say that you are one of the ones that can actually qualify for the 3% down option. Most people will fall in the 5 or more. It's a little harder to get the 3 for sure, but I did want to cover that in today's video. So that means that if you got the 3% down option approval, you could literally buy a $700,000 primary residence with only a $21,000 down payment. Like, yes, mind blown, head explodes for real. And if we're doing 700,000 and we want to do 5% as an example, then that's going to be still only a $35,000 down payment, of course, plus your closing costs, plus your prepaid items. But that's huge because remember I said not that long ago, like everybody was stuck on, like you've got to have the 20% down to do the jumbo loan. And so we're literally talking not needing $140,000 down, but needing $21,000 potentially or $35,000 potentially. Like that is literally huge. And you might say, well, I'm one of those people and I think that I should put down as much money as possible. And you know what? If you don't owe any other debt whatsoever besides the mortgage, more power to you, put all that money down. But here's a great example. Let's say that you don't have the 140, but let's say that you have, just make it simple today. Let's just say you've got $70,000 that you could put down, plus your closing, plus your prepaids, okay? And let's say that you have a car. And let's say that that car note is at a 4% interest rate, which is not that bad compared to mortgage rates these days. But you're one of those people that you're going to keep this car for 10 years. Like you're keeping this car, okay? And let's say that that payment is $900 a month because of however you financed it, all right? Well, we can take the $70,000 and we can put it down, okay? Or we can take $35,000 down option and take the other $35,000 and pay off the car, saving $900 a month. Just as a super rough example, a $35,000 down payment, if, and I'm not quoting a rate, if hypothetically speaking your rate was 5.5% for 30 years, that would save you $198.73 a month by putting down the extra $35,000, or save you $900 a month using that same amount of money. Now, I don't know about you, but if I can take $35,000 and use it one of two ways, and one saves me $900 and one saves me $200 basically, and the $900 was not tax deductible interest for whatever reason, but my mortgage is tax deductible interest, well, to me that makes like literally all the sense in the entire world. So the good news is if you search this topic, 5% down jumbo loan, they do exist. I can help you. I'm licensed in many states and adding more constantly. And even for ones I'm not licensed in, I do have contacts that I can help you and help facilitate that with you. So whether you're looking to buy in 9 days or 90 days, give me a call, shoot me a text, or send me an email, because I would love to help you with your financing in pretty much any state. I can try to help put you in touch with people if it's not me under one of my licenses. That way, you're taken care of and you're handed off to someone that I know versus just, someone maybe that you don't, and that's not putting you through a connection. So if you're looking for a 5% down jumbo loan, I would love to help you. Please be sure to like, please be sure to subscribe. Thank you so much for tuning in, and I look forward to seeing you in the next one.